Tax planning tips to maximize your refund. Tax planning is a crucial process that ensures you're paying the right amount of taxes while taking advantage of all possible tax deductions and credits. When executed correctly, effective tax planning can result in significant savings, potentially increasing your refund. This article will explore 7 key strategies to help you maximize your refund during the next tax season. Before moving forward, if you are new to our channel, don't forget to like and subscribe to our channel for future interesting videos. Understand your tax bracket. Diving into the world of tax planning, your first pit stop should be grasping the concept of tax brackets. Essentially, tax brackets are the critical determinants of the rate at which your hard-earned income gets taxed. The American tax system is designed in a progressive manner, translating to higher taxes as your income ascends the ladder. Now, why does understanding your tax bracket matter? Well, it empowers you with the knowledge to deftly maneuver your taxable income. Think of it as a game of chess, where being aware of your piece's powers can help you strategize better. By knowing your tax bracket, you're equipped with the power to potentially shrink your tax liability. So, before you start counting your potential refund, take a moment to familiarize yourself with your tax bracket. Remember, knowledge is power, and in this case, it might just be the power to boost your refund. Leverage your retirement contributions. Are you looking for an effective way to decrease your taxable income? Look no further than your retirement contributions. Let's think of your contributions to traditional 401 or individual retirement accounts, IRAs, as a double-edged sword. Not only do they pave the way for a secure future, but they also offer the immediate advantage of being tax deductible. Essentially, this means these contributions reduce your taxable income for the given year. Pretty neat, right? But hold your horses. While this may sound like an open invitation to contribute to your heart's content, there are limitations in place. Each year brings a set contribution limit, ensuring a balanced approach to retirement savings. As such, strategize your savings accordingly to enjoy optimal tax benefits. Don't just save for the future. Save smart and let your retirement contributions work as a handy tool to reduce your tax liability and, in turn, maximize your refund. After all, why not make your money work just as hard for you as you work for it? Make the most of tax credits. Picture this. Tax credits are like store coupons that you can use at the counter when you're checking out. Only in this case, the store is the IRS and the counter is your tax liability. Unlike tax deductions, which only reduce the amount of income that's subject to tax, tax credits directly cut down your tax bill, dollar for dollar. Quite the bargain, wouldn't you agree? Here's where it gets interesting. There are a variety of tax credits up for grabs, covering a broad range of activities. Are you paying for college? The American Opportunity Credit or the Lifetime Learning Credit might be right up your alley. Have you been investing in making your home more energy efficient? The Residential Energy Efficient Property Credit could potentially reward your eco-friendly initiatives. And if you have children, you're likely eligible for the Child Tax Credit. The trick is to ensure you're not leaving any eligible tax credits unclaimed. Think of it like a treasure hunt. You'll need to do a bit of digging, but the reward could be a hefty decrease in your tax bill, leading to a substantial increase in your refund. However, keep in mind that some tax credits are refundable, meaning if the credit's value is more than the taxes you owe, you'll get the difference back as a refund. Others, on the other hand, are non-refundable. Non-refundable credits will only reduce the amount of tax you owe but won't provide you with a refund. Understanding this distinction is key to accurately predicting your potential refund. Don't overlook itemized deductions. Have you ever wondered if the standard deduction is the best way to go, or if itemizing your deductions could save you more money? The answer lies in a little bit of homework, but don't worry, it's worth it. Think of the standard deduction as a one-size-fits-all tax relief. It's the same for everyone, regardless of their expenses. On the other hand, itemized deductions are like a tailor-made suit, crafted precisely for your unique financial situation. These deductions include payments for things like state and local taxes, mortgage interest, and charitable donations. Here's an example. Let's say the standard deduction for the tax year is $12,000, but after keeping track of all your deductible expenses, you find that they total $15,000. In this scenario, it would be beneficial to itemize your deductions, as it would give you an additional $3,000 in tax relief. Remember, the key is record keeping. Start organizing your receipts and maintaining a record of your expenses right from the start of the year. This record should include not just significant expenses but even the seemingly small ones. They can add up. And while this may seem like a tedious task, Various apps can simplify the process, so explore your options. Save for your child's education. Did you know that preparing for your child's education can also be a part of your tax strategy? It's true. A 529 plan is an excellent option to consider when looking to save for your little one's future educational needs, while simultaneously carving out a tax-efficient path. How does it work, you ask? Well, the contributions you make towards a 529 plan bloom tax-free, and even better, the withdrawals you make for qualifying education costs remain untaxed. It's like planting a tree that grows tax-free fruits. Sounds like a win-win, right? But that's not the end of the perks. Some states are so supportive of your efforts to secure your child's educational future that they allow you to subtract your contributions from your state tax return. It's like receiving a pat on the back in the form of tax savings. Now, who wouldn't appreciate a pat like that? However, a word of caution here. Each state has its own rules when it comes to 529 plans, so it's essential to dig a little deeper into the specifics of your state's plan. Understand the finer details, including the contribution limits, the qualifying educational expenses, and the tax benefits offered. Plan for your healthcare expenses. Ever think of your healthcare costs as a way to increase your tax refund? Surprisingly, they can be. With the help of health savings accounts, HSAs, or flexible spending accounts, FSAs, you have a golden opportunity to put pre-tax dollars to good use. By funding these accounts, you're effectively reducing your taxable income while preparing for those inevitable healthcare costs. It's like having your cake and eating it too. But there's more. If you've been paying premiums for long-term care insurance, you could be in for a tax treat, provided they, along with your other medical expenses, cross a certain percentage of your adjusted gross income, you can deduct them. It's like the IRS is giving you a small pat on the back for taking care of your health. Keep in mind that both ASAs and FSAs come with their own set of rules and limits. ASAs, for instance, require you to be enrolled in a high-deductible health plan, HDHP. On the other hand, unused funds in an FSA typically don't roll over to the next year. So take the time to dive deep into the specifics and strategize accordingly. After all, healthcare is a necessity, and any way to get a tax break out of it is worth exploring, wouldn't you agree? Hire a tax professional. You might be thinking, why would I pay someone to do my taxes when I can just do them myself? The answer is simple. Hiring a tax professional can pay off big time. We're not just talking about the peace of mind that comes with knowing your taxes have been handled correctly, although that's a huge plus. A tax professional's expertise can also translate into serious savings. For instance, tax professionals are well versed in the labyrinth of tax laws, deductions, and credits. This means they have a keen eye for identifying those elusive tax breaks you might have missed. Remember, just like the game of chess we mentioned earlier, knowing and utilizing every piece on the board can make all the difference. Your tax professional is like your grandmaster, guiding you towards a checkmate against your tax liability. Tax professionals also provide a safety net of support if you ever need to interact with the IRS, saving you from navigating the process alone. Whether you're facing an audit or you need to negotiate payment plans, having a skilled professional by your side can prove invaluable. The cost of hiring a tax professional may seem like an added expense, but when you weigh it against the potential increase in your refund, it becomes an investment that can pay for itself. In the end, having a tax professional on your side can be a game changer. They can help you strategize your moves, make the most of your tax breaks, and ultimately maximize your refund. So when you're laying out your tax planning strategy, consider making room for a tax professional. It's about making a calculated decision that could significantly boost your refund. And let's face it, who wouldn't appreciate an extra boost? Let the experts take the helm, helping you navigate the tax seas with confidence and precision. Because with the right guidance, even the choppy waters of tax planning can lead to smooth sailing towards a hefty refund. If you enjoyed from this video, don't forget to like and subscribe to our channel. Thanks for watching.